Well, for the time being, let's invite our next corporate on the show, Mr. Narayan, the chairman and MD of GIC Re. Hi, Mr. Narayan. Thanks so much for joining in. Well, the last time you spoke to CNBC-TV18, you said that the NEP, that's the net earned premium, you're expecting a growth of around 5 to 6% in the second half of the year. There was a contraction in quarter 3. So you'll have to grow by close to around 15% to meet that guidance that you'd given us. Is it on course?
No, not really. I think we would be more or less flat compared to the previous year for this year. So I would say 23-24 would be flat compared to 22-23. But I think the growth would happen going forward.
Okay, all right. So that earlier 5 to 6% will not come about, but you're saying for this year it'll be more or less flattish. So since growth is going to come about in the coming fiscal, what can you guide us in terms of a growth? Give us a broad band.
So typically a very broad band would be 10 to 12% year on year compared to 23-24. Simply because our first April renewals, which was our domestic renewals, was actually quite strong for us. I would say we grew almost 30% year on year on that business. Now, if you look at my business, 30% is my first April renewals. 30% comes from the obligatory sessions, which happens throughout the year, and 30% is my international book. Now, the international book has remained flat simply because we just wanted to kind of go through with the kind of business that we were writing earlier. We have not really grown there. That growth might happen going forward in the 1st Jan 25 renewals. So if you look at it overall, when I've grown 30% on my 30% Indian domestic treaty book, it would translate into a 10 to 12% year on year on the entire book.
Got it. Mr. Narayanan, thank you so much for joining us. I want to understand a bit on the geographic shift that your business has seen. In the last 9 months, your international share has gone up quite a bit, I think about 200 basis points. It's now at 31% of the overall business. Can you tell us what is the premium growth, what is the combined ratio that you've seen between international and domestic? Where is it the strongest, and what is the plan over the next couple of years?
Right. So, like I said, this April renewals, we have grown our book 30%. So, obviously, what that means is our domestic book in the overall mix would grow. So, I would say going forward for 24-25, our domestic book would be close to 75% of the total. About 25% would be our international book. Essentially, what it means is we have not really grown our international book because we still wanted to consolidate there, ensure that the business that we are writing is good. We also need to get our credit rating, international credit rating, to a level where we are able to attract and write the best businesses available in that market. So currently the focus is more on the domestic book, and that is where we are planning to grow, and that's where we have grown in this 1st April renewals by about 30%.
So what is the international book number? I mean, I understand that the focus is more on the domestic book, but what will the international growth be over the next few years?
Oh, it will be flat.
Specifically it'll be flat. Okay.
It will be
Even
flat
for
simply
FY25?
because, yes. What happens is the international renewals happen on 1st Jan mainly, So the 1st Jan for 24 is already gone, where we wrote almost the same kind of book that we wrote earlier. Now, the next change would happen in 1st Jan 25. And that is where, depending on the kind of credit rating boost that we get, we would be planning to write more business there. But since that is only for 1 quarter of the 24-25 year, it would not make a big difference. So assuming that we do grow our international book going forward in the next year, then 25-26 is when you would see a growth in the international book.
Mr. Narayanan, just coming back to you, sir, just wanted to point out for our viewers that markets have surged. Look at the indices. We've got a very sharp surge which has come out of nowhere. After the open, the things have flattened out a little bit. But look at what's happening now. 100 points is basically what we have. We're almost at the day's highest level and above 22,600 now. So, I mean, this is looking much better than where we were about 10 minutes back, even sort of 10 minutes back. So we've not been trading for that long. Just look at the Nifty Bank as well, which is also trying to make a bit of a comeback. But there we are flat so far. So more in terms of stocks, etc. in a bit. But back to the conversation with the GIC management. Mr. Narayanan, good morning. Prashant here, sir. So, your underwriting profits are largely flat because of reductions in commissions and profits. Could you tell us when do we see these improve underwriting profits improve?
So this will take some time simply because it is a journey rather than something that would happen in 6 to 9 months. Like I said, we've increased our domestic writings this April, and these have been businesses that we are very confident about. When we have underwritten this increased lines of businesses, we have obviously looked at and written the more profitable books of business. But typically in a reinsurance, business, you would want to look at maybe over a period of 12 to 18 months before the results actually start becoming visible on the balance sheet side. So I guess we are more at a time where we are traveling towards a good combined ratio scenario. We've been doing that year on year. If you have seen the last 3 years, we have been improving our combined ratios year on year. We propose to do that going forward. So the kind of businesses that we write will continue to ensure that it contributes to our bottom line. Our underwriting profits increase, our return on equity increases. So that is the idea. But I guess this is something which will pan out over a period of the next 12 to 18 months.
So the combined ratio then, which is shot up to 120%. I mean, what does that do to your full year guidance? So you told us that you'd be at 109% for FY24, 108 by FY25.
Right.
Would you like to revise that higher?
Not really. So like I said, we wanted to be at 109 for FY24. But then there have been 9 catastrophic events that have hit the Indian market. And when I have got 70% of my book from the Indian market, obviously, that has meant that the combined ratios have gone up. Now, again, 9 months in FY24, we showed a combined of 117. We believe that will improve. We are still pretty early in the day to actually give you a figure. But then we do believe that will improve going forward in the 4th quarter, simply because that is the quarter which, internationally, the world over, you don't see much of catastrophic events happening in that quarter. For us, that is the last quarter. So, a lot of adjustments in terms of premium happens, because otherwise in the previous 3 quarters, there are a bit of estimates that we have to do because we have not got the figures from the insurance companies. Here, we will ensure that we get all those figures, all the adjustments will happen. The reserving will be relooked. So all that will ensure, I think, to a great extent, we are very confident that the combined ratio will be quite positive. We will definitely improve 4 or 5% from the 117 that we were in 9 months 2024. So I think I'm very confident about the way this book is performed. Going forward with the kind of businesses that we have written, we are very confident that our combined ratios will improve. I think we're still fine with those guidances of improving. What we essentially want is to improve our combined ratio by 1% year on year, so that over a period of 7 to 8 years, we come closer to 100. What will also happen is, being in this business of taking risks, it will also mean that there will be 1 or 2 years where things will go wrong simply because of some catastrophic events. But I think over a period of time, I think we will get there.
Okay, all right, Mr. Narayan, there were some roadshows that were conducted, I think, in various parts of the world, whether it was New York, Hong Kong as well. What was the kind of investor feedback that you all got? The government of India still has 85% stake in the company, and they have to bring it down to around 75%, which means they need to sell close to 10%. What's the feedback? And will this 10% reduction be done in the coming fiscal itself? That's FY25?
So 2 points there. One, of course, is when the roadshow happened, the feedback was pretty positive. I think, most investors wanted to know what's our story, because they had seen. So initially, before that, we had some roadshows in Mumbai as well. Post that, once investors and analysts started understanding our business, the stock price did go up. So when we went internationally, they were all keen to know what's happening, what's our story, what's our take on the business in India, how do we propose to improve our operating balances and things like that. So it was quite a good feedback. We had representatives from the government also joining us from DIPAM. So it was a very good interaction with investors, which we did possibly after 5 or 6 years after our IPO. So investors were very much taken in by what we were proposing, the kind of story that we had, the kind of profitability that we were showing. So I think they were very happy with that. Most people had one point when it came to investment, which was that there was very low floating stock of GIC in the market. So obviously, like you said, government today is at 85. They need to come down to 75 to ensure that there is a minimum public shareholding of 25%. So that 10% dilution should happen. When it will happen will possibly depend on the government for them to take that call. Possibly after the elections is when they would take a decision on this. But I think the roadshow by itself went off well. It has definitely given us a good idea about what investors are looking for. And possibly, hopefully, it has given the investors a good story about what GIC is doing and why it's a good stock.
All right, Mr. Narayanan, thanks a lot for joining in and appreciate your thoughts here. By the